bearing with me. And yes, that's life, isn't it? It's like trading as well, where the unexpected always happens, even though we are well prepared. We try to um, be prepared for the things that we can't be prepared for, like internet not working. But that's why it's important to always have a backup opportunity. I remember it was in 2012 or something. I was trading, like scalping. I was scalping quite big positions. And it was late at night because in Australia, the American market opens at night. And so a car crashed into a power pole and the whole suburb went black. And I lost a lot of money because I didn't have a backup option. So I learned from that very early onwards to always have my phone right next to me and not somewhere where I can't find it. So, but today I want to talk about the 7 ways of how traders mess up their trading career. And this is really the most important conversation that we can have with ourselves, for ourselves, because you see, a problem well defined is a problem half solved. And I find that many traders, they are like deer in the headlights. They make these mistakes over and over again, and they don't really know why and how. And so that's why it's really important to not only understand how to do things better, but also go into the uncomfortable and look at, okay, so how do I specifically mess up my trades? And so the good news is there's only so many ways we can mess up. But first you need to understand what is it that you specifically do. Think about, for example, the last time you put on your trousers, right? Did you start with the left leg or the right leg? And once you have now that you have the awareness for it, and you will pay attention, you will realize you always start with the same leg. Also, when you start walking, you will always have a leading leg. And we don't think about these things, right? But it's important that in trading, we become aware of those unconscious automatic behaviors. And that's what I want to do with you guys today. So today I want to go through lots of examples with you, how my traders mess up. This is like a real, everything is real, um, real examples. So nothing made up. And most probably you will see yourself in some of them. Now, once you start mapping out what your strategy for failure is in trading, you will then be able to look at how can you change your strategy. So, for example, if you put your left leg into the right trousers leg and your right leg into the left trousers leg, that's a strategy for failure, right? And so once you understand that, you can change it. It's a little bit of a silly example, but anyone who has kids and toddlers will see that this is exactly what happens for kids, doesn't it? And when we start trading or when we don't start working on our mindset, this is exactly where we're at. We are like a toddler. So that's why, in my opinion, experience, this is one of the most important conversations. And anyone who is willing to do this work that we are doing today can be a successful trader or even more successful as you already are. And that is really good to know, isn't it? Now, okay. Here we go. So if you think about trading, right, I always like to think structurally. And I remember at the beginning of my career, I was so much in trauma from, I didn't even have a traumatic childhood as such, but it was still enough to be in trauma. And then our brain doesn't work properly. We can't think clearly. And I remember I was having French at school, and I come like right from the French border, like literally 5 minutes. I was not able to learn French. I could not comprehend it. And they thought that I have a learning disability or something along those lines. But it wasn't the case. My parents just went through divorce and I was in trauma. I was emotionally neglected. And bless my parents, we have spoken about these things. So there is no judgment. It was incredibly hard for them and have all the compassion. We had peace with that. So anything that I share about my family today, know that I have resolved that with them first. And, for the last 10 years, 20 years, we are at peace with whatever happened. I wasn't the easiest child either. So, but it's really important to think clearly. And what I found, the more I worked on on myself, the more clarity I got in my thinking naturally. And I would look at French, for example. Nowadays, I can learn it easily because I have clarity of mind, because all the emotional baggage is just gone. Thank God. It was a lot of work, but once you get there, it's just, to me, that's the true freedom. And everything like time freedom, financial freedom comes on the back of the emotional freedom. So there's only two areas that we need to master in trading, our strategy and also our risk management, risk and money management. And by the way, if you have any questions, please feel free to put it into the chat and I will be responding as I see the questions coming in. I rather respond to your questions than do Mandi TV and just talk at you guys. Well, no Mandi TV today because the camera is off, but you know what I mean, right? So it's in the strategy, so the execution of our strategy, and in the miscalculation of the money and risk management. These are the only two parts to a trade. And that starts making it a little bit more manageable. Now, when we look at the 5 areas where we can mess up, it's at the entries, during the trade, at the exits, then our risk management, the number of trades and the position sizing. And you can see it's just these 5 areas. That's so great, isn't it? Because now you start having a structure of thinking where you can log which areas do you make your mistakes mostly in. So there are traders that nail the entries, but they suck at trade management. They get scared as they continue, as they're in the trade, and the trade is somewhere between their stop loss and their profit target, and they enter too early or don't exit at all. Others are really great at their exits, but the timing of the entry is not so good, right? So you need to find out what it is that you consistently do. You will be great in one area, but not so great in the other area. So, for example, there is this concept that we look at, and I find this always fascinating. People who are great at starting projects, things, relationships, but they don't finish it, they will never have what they want. And people who are great to pick up other people's projects and finish that, they will always have what they don't want. Right? So it's very interesting in trading as well. I can see parallels, and I unfortunately don't have the time to go into these now because we want to focus on the areas where we can mess up. But yeah, think about it. What is it for you? Are you someone who is great at starting but not finishing? Or are you great at starting something that's already created and finish that? That will have a great impact on the quality and fulfillment of your life. Now, let's go to a little deeper. What specifically can we mess up in our trading? Well, we all know about FOMO and impulsiveness, the fear of getting it wrong, so the hesitation. When we are in the trade, it's the fear of messing it up. Oh no, I'm such a profit. Now I'm worried that I'm going to give it all back. The stress and the emotions that come up and starting to become outcome focused versus process focused. So I see that a lot with my traders who want to pass evaluations in the prop firms, and they're like, just another $100. I actually just had someone yesterday. He's like, just another $100 and then I pass. And guess what? Today is $300 off target. That is, yeah, this is human and natural. But the thing is, if we want to be great at trading, we have to do everything. This is that is unnatural. Like I always say, like dancing ballet. It is not natural for our body that we turn our toes to the outside. Our hips are not designed like that or to fly through the air. And yet we can do it because they train and practice. And anyone who has seen toes of a ballet dancer knows how much blood, sweat, and tears literally is involved in learning this. So we are actually lucky. We are sitting behind the computer, no blood, no sweat, a lot of tears, but we can change that around. So when during the exits, we have the fear of giving it all back and the fear of not enough, right? This is the, oh, what if I get out now and then it continues without me? Or, I was, trader emailed me yesterday saying, damn it, I was in AMD and I got uncertain. And I thought, I'm going to be a good boy. I'm going to have my risk management in place. He exited straight at a loss. And then it would have been like a six-bagger, right? So AMD just went bananas. And then we have the fear of taking a loss and we turn into hoping and praying. Then, of course, the risk management position sizing too big, too many positions. So you see all these opportunities and you want to take them all. But if you have a small account, like $10,000, you can't take them all. That's the reality. And this is greedy, eager, unrealistic expectations. Now, let's go into the meat of it. So this is a trader who experienced the fear of missing out and the impulsiveness. So you can see here, oops, here he saw a potential setup. He is a breakout trader. So technically speaking, he should wait till the size being taken out. But he's like, look at this massive candle. That's going to take the next leg up. And guess what happened? Yep, it didn't take the next leg up. It first went down and he ended up in a loss. Right? So it's this little voice whispering in our ear, this is good enough. Better get in early. You can make more profits. Or on the other side, what if the trade takes off without me? Yeah, we've all said that to ourselves. So both are actually a form of FOMO, a form of missing out. One is driven by fear of not enough, and the other one is driven by the fear of being left behind. So they want more, and before you know, these fears become so overwhelming that you impulsively jump into the trade. And sometimes we do get lucky, right? I mean, look at it. This looks actually like a really good setup, right? But there's a reason why he says he has to wait for the high to be taken out. So in this case, he didn't get lucky. And but thank God he is a really good trader who takes his losses straight away. So it wasn't like he had a big uh, loss. Why does fear of being not enough drive FOMO? Yeah, this is an awesome questions futures operator one. So the fear of not being enough, um, that is coming from scarcity thinking. And when we have scarcity thinking, we think that we have to act quickly so that we get something, we get breadcrumbs as well, because otherwise we are being left behind. And that is just one example how it could drive FOMO. The thing is, this question can be answered in many different ways depending on the trader, on the individual. But this is something that I see a lot. So because I think I'm not good enough, I feel bad about not being good enough, and I want to prove to myself that I can do it. And usually, what comes with the not being good enough is that we feel that we have the perspective that we are in a situation in our life that we don't like. And so, for example, was working with a trader who was in a job that he hated, and his trading was driven a lot by FOMO, and because he wanted to escape his job so badly. And if you have the competence and the confidence that you're good enough, you don't need to bring the time aspect in and make it quickly. You know that if you take one step at a time and you grow your account one step at a time by, let's say, 1% a day, or, I mean, with CFDs, that's possible nowadays. But whatever it is, how you grow your account, you can grow it slowly because you have the self-confidence that there will always be enough for you. Right, so I hope this answered your question. Again, it's not a question that can be answered in black and white, but FOMO, you can always look back and say, where was I coming from scarcity thinking? My absolute pleasure, futures operator. Keep asking awesome questions. So the hesitation. So what happened then afterwards was there was the setup, right? So that high was being taken out, and he wanted to get in. So here it didn't close above, right? So he was still hesitant. And then he's like, that's my entry. Um, and he got worried and he got out of this trade, right? So he did not get into this trade. He hesitated. And why did he hesitate? Because he had the fear of getting it wrong again. So here he was too overeager. He wanted to jump in. He did jump in, and then it turned around. Here he was just about to get into the trade, but then it turned around again. This was the real entry. And then in hindsight, it's like, it's so clear. Why didn't I take this trade? And even though technically a stop loss would have been here, but it was a feeling that stopped him to enter this trade. So yeah, that is the hesitation of getting it wrong. It's always this little voice in the back of our mind again. What if it doesn't work out? What if the trade goes against me again? What if I've misread the signal? Maybe I need to look for more confirmation, check the RSI, check the MACD. It's always where uncertainty kicks in, and that's a feeling, and with that comes that little voice. I want to encourage you to really listen to what is it that you say to yourself in those moments when the uncertainty kicks in. That will be the first clue that will help you to improve your trading. So here we have a situation where the trader he was having the fear of giving back. So again, breakout traders, I find there's a lot of breakout traders nowadays, quite interesting. Maybe they're the guys that I attract, but so he went long here. He knew retracement is fine. He's a little bit of a swing trader, so he was okay with that. That was, I think, the Nikkei. And then he knew his stop loss is in. He's a really good trader. Went up, went into profit, and then he started getting uncertain. He's like, what if I give my profits back? Ah, should I stay? Should I go? And again, this uncertainty, what else can I check? And he's like, you know what? I'm going to take my profits and run. So he's someone who's really good at starting and nailing his entries, but his exits, they're just had lots of room for improvement. And as you can see, he got out here, even though there was technically no reason to get out, because see, the low of this candle wasn't even taken out. And technically this high wasn't taken out. And so out of fear of giving back his profits, he missed out on all of that. So then that was a very bitter feeling for him. And he was upset with himself and cranky. And he's like, oh man, why do I always keep doing this? I could have made so much more money. And here goes the self-talk roller coaster again. And guess what happened then? Um, hmm. Actually, I don't know why I don't have this one here, but what happened was, I show you later what happened afterwards. Okay, so here we have the trade management of overthinking again, the fear of being wrong this time. So this trader is his favorite entry. So he is a reversal pattern trader outside Bollinger Bands. This is also my favorite entry, just by coincidence. A lot of traders trade like that. This was a major level here, so he went long. This is gold, recent gold trade. And then see what happened here. It did a little U-turn, and then he started doubting himself. And he's like, oh, what if it goes back into a loss? Most probably this is going to go retest the stop loss, maybe taking out that loss, and then it's going to go for the second leg up only. So he didn't want to take that risk of letting it go into a loss, even though it wouldn't have been a big loss, but he just didn't like it. His target was up here, 3970. He exited, and we all know what happened next. Boom, it went all the way into his target without him, because yes, he could have entered here. Number one, it was whilst he was asleep, and number two, his risk management would have been out of whack, so he didn't want to take this trade. So yes, you can imagine how angry he felt that he missed out on all this. Now the question is, how did he even end up in making such a mistake. So these mistakes, they never happen as a closed circuit. There's always lots of little events leading up to the mistakes that we make. There's always something that happened before we got uncertain. There's always something that happened before we impulsively jumped into a trade. And when you understand what that is that happened beforehand, then you will be able to be proactive and say, wow, now I'm at risk of making a mistake in terms of, hesitating. So let's have a look at what happened here beforehand. He made a mistake at the exit. So he's like, again, that's the gold trade, right? Gold did a double bottom, came out, took out the 4,000 again. That's a really significant mark. And he's like, double bottom, target 4,050, shear this level. Most probably takes this level out. Most probably it's going to turn around at this level and then have a great short signal again, because that's a test and reject, as Linda Rushka calls it. And then I can have a beautiful short here. So he was already preparing, planning, and then look what happened. He actually didn't wait for the candle to close. It's like, okay, well, it's not that bad. It's still a very strong setup, isn't it? But then it turned around. And even though he had moved his candle, his stop loss up when he entered a little too early, because he knew now it's not a high probability trade anymore, he then moved his stop loss, took it out completely, and then it went into the abyss, and he ended up with a really big loss. So this is what happened before this trade. And that was the main reason why he was, as we call it, gun shy, why he was hesitating here to let that trade go even into a stop loss. Because many times when we have a impulse move to the downside or to the upside, we then have an A, B, C, right? So that's one of Linda Rushke's favorite trades, A, B, C. But he was like, oh no, I don't want to take that risk again because I had messed up here. So look at what is going on in your life. I was also talking to a trader. He he is in a job that pays him quite well, and he hates how they're being treated, how him and his colleagues are being treated. There was an incident at work, and it didn't even affect him. It was affecting some of his co-workers. And this guy is a really good trader, right? So he every day he makes his 300-400 euros, and really consistent, really good eye, really good work. It just took this one incident where he got triggered, where all old conditioning got triggered, and he started going on tilt and messed up 2 weeks of really good work. Right, so always look at what happened before I went on tilt, what happened before I made this mistake. It's never just the event in itself. And when you understand what your unconscious strategy is of making those mistakes, then you will be able to be proactive and really limit and minimize those unforced errors, as Linda Rushke calls them. If you don't know Linda Rushke, she is one of the market wizards, 45 years experience. She's one of the really most amazing traders that that you can come across. She has an amazing YouTube channel. She shares really openly how she traded, how she became successful, and the challenges that she had. She shares that actually in her book Trading Sardines, which I think you can buy on Amazon now. I absolutely love this book. So yeah, you can see that even the highly successful traders had lots of challenges and made lots of mistakes and were still so highly successful. So the question with my trader who messed up 2 weeks of good trading because something happened at work is, why did he mess up? Why did he decide to still trade even though that mentally and emotionally he wasn't in a good state? Why did he decide to mess up his own trading? Right, so that's a coping mechanism. And what we want to do is we want to learn to, instead of coping, we want to create a capacity for these experiences that are uncomfortable, that are painful. that we don't like, right? So, for example, experiences when a family member is sick, or when something's up with the kids, or when we have a fight with a partner, we need to learn to create capacity to dealing with that. And when you feel very, very certain and secure within yourself, then whatever happens on the outside, it can't touch you on the inside because your strength comes from within. If you are someone who's kind of reliant on the outside world, and it's like, as long as you do what I want you to do, I am okay, then these things will happen and they will affect your trading performance, right? Because then you go into coping instead of having the capacity to deal with these unpleasant situations and to make space and make room for anything that feels uncomfortable and annoying. So here we have another example. Um, I hope you guys see yourself in those examples because, again, as I said, they're real life examples. So this trader, reversal pattern trader, um, it's a test and reject. I know the ICT crowd claims that it's their own. Um, they have discovered it, but this is actually around since 1908. Wyckoff was one of the first ones in 1908 in his book, The Wyckoff Methodology. I can't remember. That's an upthrust, and that's a spring, right? So these false breaks. Yeah, sorry, ICT crowd. You did not invent anything. Even the turtle soup is something that Linda Rushke coined in her book Street Smarts in 1995. So I saw this guy on Twitter. He's got like a massive following, and he's like, "I invented turtle soup." And it's like, oh, dudes, never mind. As long as it makes money, that's all that counts, right? And Linda is also really cool about it. She really doesn't care. So here he went short. Epic trade, right? I mean, wow, he was in such a good profit. His target was down here, this zone. And he then was faced with a question, is that just a retracement, maybe even a little ABC, and then continues to the downside? That's what he actually thought it's going to be. So he stayed in this trade, didn't take his profits. And guess what happened? It retested that zone. So it filled these imbalance. Linda calls it a K fill, and then continued to the downside, but then found support exactly at the area where he thought it's going to find support here. So at this candlestick structure. So here buyers and sellers are in um, in agreement, and here we have an imbalance where there were more sellers than buyers. And that's what the trader thought. It's going to go into the agreement structure here, where buyers and sellers are in agreement. But as you can see, it then went all the way up. And because he went through this emotional roller coaster, first he was an amazing profit, then in a loss, and then in a profit again. He started hoping and praying. And when this happened, he did not have a stop loss in, and he ended up in a massive loss because he left it running. And I think he went short again here, hoping that it's going to continue down, that he can at least get out at break even, but it actually continued further to the upside, right? So what happens then after that is that most probably, and this is what this trader did, but this is not his example. That's the example of the trader from, uh, from here. From here. So this trader who hesitated because he was worried of getting it wrong. What happened afterwards was, here was the fear of giving it back. He got out. And then look, that thing just went bananas, and the Nikkei. And then he thought, you know what? Screw that. I'm going to re-enter, because the pain of having missed out caused such a big urge to make it all back again. The making it all back again, the money that he missed out on. And so he started to force his profitable trade. And guess what happened? It did one last hooray, and then it collapsed. And then he gave back all the profits that he had made here. So what happens is, when you're in an emotional roller coaster, and you jump into a trade driven by fear and the regret of missing out, you can't think clearly anymore. And then it's really, really hard to trade well. It's really, really hard to follow your strategy because, to be honest, you don't really have a strategy here when you just jump in. That is the reason why we don't jump in a trade. His stop loss could have been down here, but by then he was just an emotional wreck. And so we want to avoid even getting to this situation. Now, this is again driven by the fear of missing out. Whilst he was staring at this trade, counting how much money he had missed out on, there was other trades that were really great setups because he's a breakout trader. He doesn't trade continuation patterns. He is not good at it. That was the reason why he didn't take this re-entry, because it's not his game. He is good at this one here. And so, yeah, very bitter. So you can see, once you understand and really write into your chart how you messed up, and maybe sit down with someone else, because you can't see yourself from the back of your eyeballs, I always say. Or what we also say is that it's the things you didn't know. And when you have another pair of eyes looking at your trades and pointing out some things from a different perspective, then you can expand your boundary conditions of your thinking and say, oh, okay, now I realize, now I understand. And that's how we learn and grow and become better. The emotional and the mental and the skill set growth are all intertwined. Because, so many times I'm being asked, Mandi, what is more important, your skill set or your mindset? And it's like, this is like the stupidest question to ask. Or even people will say, yeah, trading is 90% mindset and 10% skill set. Bullshit. Like, it's not, right? You can't do one without the other. It's like saying, what is more important? Is it your arms or is it your legs? Like, you need both to fully function, and both have a really different function in our life. And so it's completely irrelevant which one is more important. You need both and need to work on both. Oops, my mouse is very delicate today. All right, so risk and money management. Now, the thing is, traders often don't put enough work into their statistical measures of their trading strategy. I see that a lot. So they come to me with a mindset problem, but they are not really clear on the statistics on their strategy, and they resist it. Why? Well, because it's painful to look in the mirror when you're fat, right? It's, yeah, well, when I'm fat, I should not say you, because for other people it might be different. I like to look into the mirror when I feel well trained and I'm toned. I don't need to be slim. I will never be slim. I love my food too much. But yes, so the thing is, um, we like to look in the mirror when we feel good about ourselves. No statistics. They're a mirror that points out everything that does not look good about ourselves, until we have learned to use these data points and to turn them into our secret tool to build our trading strategy, to build our mental game, and to make us really help us really to reach our highest potential. So what you need to know before you start with your risk and money management: what is your strategy's edge? As I said, this trader that these two traders that I showed you, they're breakout traders. They're really good at continuation patterns and breakouts. Then another trader is really good at reversal patterns. So those tests and rejects, I love them. They are my superpower. I'm really good at them. Not so good at trending markets. So now the volatility of this market, I'm in heaven. Right? What is your profit factor? So the profit factor tells you how much do you make for every dollar you lose. And of course, you have to have a profit factor of above 1. If your profit factor is less than 1, that means that you spend more than you earn. And so your profit factor is the number that you want to increase, and not your win and loss ratio. Most of my successful traders, they have a win-loss ratio of 35, 40, maybe 45%. none of them has a win-loss ratio of above 50%. So, which is really peculiar. But maybe there's traders who have a 90% profit loss ratio and I haven't met them, right? I'm not saying this is not possible. I just say the traders that I have met in the last 20 years of my trading and coaching career. So, working really with thousands of traders. What is the number of losing and winning trades in a row? So when you see that your number of winning trades in a row is 5, and you get to trade number 5, well, then you're at risk of making a mistake, right? Can you see how your statistics become your superpower? Because now you can be proactive and say, what happens at trade number 5? Do I get tired? Do I get too confident? Do I get superhero syndrome? Right? What happens then? And that's how I can improve if I find out what's happening in that moment, and then maybe get to 6 winning trades in a row. Or on the flip side, protect myself, step aside, build my mental and emotional capital up first again, and then look at, okay, so I know that I'm a little bit depleted. I need to take care of myself, do some loving self-care, and then I will trade well again. Oh, what I also find, and this is something that I experience, this experience, I don't know if you guys have that, but I love chocolates. And when I buy a whole block of chocolates, I will not stop. I will devour that whole thing. In Australia, we have this this term guzzle guts. I turn into a real guzzle guts. And I found the same behavior with trading in my trading if I'm not careful. And this is the way I would go on tilt. So I would go on tilt because I'm doing well, rarely because I have not done well before. I know, okay, now I'm at risk, but when I'm doing well, I want more, I want more, I want more. Like I want to have the whole chocolate. Knowing that this is my weakness, I now can put in some proactive locks where I say, all right, I feel now I'm turning into a guzzle guts. Now I need to step away because otherwise I won't stop myself. Otherwise, I'm going to lose everything that I've made because I'm not going to follow my strategy anymore. I'm just following my dopamine hits, wanting to make more and more and more. What's your average winner and your average loser? Really simplified. If your average winner is $1,000, well, don't have $1,000 loss, right? So have a $500 loss. So that's how you can start managing or defining your risk management. And then your risk management can also be fluid. I'm not really good with having a strict risk management where I only take 1%. I'm a little bit more fluid. Another trader of mine, he's made an amazing spreadsheet where he increases his risk by how much profit he made. And it's a calculation that he did based on his strategy. So he has a spreadsheet where he fills in his trades. He only takes 2 or 3 trades a day as well, so it's manageable. But so you see, there's ways and frameworks on how to do that, and it becomes very tangible. Your MAE and your MFE. So the maximum adverse, maximum favorite excursion, simply saying how much did you let your trade run into a loss before you got out or before you turned a profit. If you make a $500 profit and you had a $5,000 loss before, that's bad risk management, isn't it? So I was working with a trader who had exactly that. He was trading really, really well. And then bang, one day, massive drawdown, like $100,000 drawdown. And so we looked at his stats and I saw that he would do exactly that. He would have these massive drawdowns. So he would have the 2-to-1 inverse. He would have a 2 drawdown to get a 1 profit. And so he changed it. He first put everything to a spreadsheet, all his trades. And then we did a little bit of playing with the data, looking at how would his strategy performed if he had taken his risk the other way around, like so only half the risk and then get out in profit. And it actually improved his profit loss, so his profit factor tremendously. The MFE, how much did you let your trade run into a profit before you got out? Right, again, if your trade was in a $100,000 profit and you got out at $40,000, it's worth nothing. And so I was working with an amazing trader who is looking to reach the $10 million mark. He's so close, but then mindset kicked in and he went back again So similar to the trader who was just $100 away from passing his prop firm um, evaluation and then ended up in a $300 drawdown. So when we see exactly how these traders make their mistakes based on the statistics, then we can work with it, right? Then we can say, well, if you let your profit run so far and then let it go back so far as well, your exit is not working. And the same, with the adverse execution, that is not good risk management if you let your your losses run so deep, because the day will come when you have this massive drawdown because the market is not going to recover. Then look at the number of trades that you trade well versus when you mess up. And I see that a lot that, when traders mess up, they have a lot of trades, like 50, and when they trade well, they have 5. Right? So what's the execution accuracy? So that's the MAE and MFE. And what's your recovery rate after you had a loss? How well do you recover? And Linda Rushke always says, well, she's not one of the best traders, but she's really good at recovering. I call her the Wings of trading. Wings is an Australian racehorse that always came from the back of the field and then won. She was unbeaten, just amazing. So the recovery rate is after you had a drawdown, how quickly and accurately, following your strategy, do you get back on your horse? Right, emotionally, mentally, and also trading wise. So you can see there is a lot to consider. And there is um, these seven, right, these points. So it's actually more than 7 ways that we can mess up our trades, but these are the main mistakes that are noticed in traders. And so you can change your trading results if you learn emotional self-regulation. So if you learn how to be in a moment where a coworker pissed you off, but you don't need to mess up and sabotage your own life because of that, right? Where you create capacity for feeling bad, feeling unsettled, and you don't need to go to coping and do stupid things. Remember our brain, they're neuroplastic. Like neuroplasticity was first, I think, talked about beginning of 2000s, and now everybody knows it doesn't matter how old we are able to change and train, create new neural pathways. If you're a trader who only creates losses and lets the losses run, sorry, let me say that again. If you're a trader who only lets the losses run, and is really bad at taking their losses, it's because you have built the neural pathways for taking losses, for not taking losses. And you need to build neural pathways for taking losses, which is the practice. That's a need to practice and train how to take losses. It's something that you don't have a muscle memory or a brain memory for. Then behavioral finance, right? So in behavioral finance, that's the Kahneman work, Thinking Fast and Slow, where he shows that we naturally make really, really bad financial decisions. So we need to learn and train ourselves how to make good financial decisions. And of course, learn to become a good loser first. I remember in 2010, someone did a newspaper article about me, and this was the title about the article. The article was nothing what I said to him, but at least he kept the title. It's like journalistic creativity. I don't know why he interviewed me. He could have just told me, I'm going to write something about you. Don't worry, I'm going to make it all up. So, yeah. And stop telling your fairy tales. Stop lying to yourself. Right? So look in the mirror, look at your stats. And I really want to invite you to be so honest with yourself that you hurt, that you want to throw up, right? That you are fed up and you say, I am going to change that. And now I know how to do it. Yeah, typical media. Yeah, never let the truth get in the way of a good story. Yes. So, do you have any questions so far? I was rushing through a little because of the internet taking up time. No questions? Excellent. So I want to Oversizing, yeah, sure. What specifically do you want to know? The reason behind it. Yeah, so again, oversizing is, there's so many reasons for it. One of the main reasons I see is a trader was in a profit and then got a loss, and they say to themselves, I want to make back that loss. It's just a few points. And then they double the position in the good intention that they just take a few points. But it's Murphy's Law, Trader Murphy's Law. It's usually at the time when they enter, when the market then goes straight against them. And so then they take the next loss, which is a bigger loss. And then they start adding another contract in the attempt to make that loss back. So it's always the attempt to make that loss back. That is coming from scarcity thinking. And thanks, Prina. Yeah. So this comes from scarcity thinking. So look at, why does it upset you so much having given back that loss, and become really aware of the coping mechanism. The coping mechanism is, I can't sit with this emotion now. I want to feel better. And the way to feel better is to make back that loss. That's the only way I can feel better now. And that's then creating the capacity for feeling like crap. Yeah, it does feel like crap giving back a loss, a profit. That's okay. It doesn't mean that you now need to jump in and do something stupid. Now you have the awareness and say, I have these feelings, I feel uncomfortable. I know my natural go-to coping mechanism is I want to fix it. And the reason why you want to fix it, that is really individual. For some, it's because they got always told off as kids when they made a mistake. For others, is because they're so competitive and they want to get to their goal really, really quickly. Like for everyone, something different. Yeah, the large potential in a move. So, really great question. So, future operators asking, what if it's done due to high confidence or large potential in a move? High confidence, is it superhero, right? Is it that you think you're better than you are? Or the large potential, like, how do you know it is large potential? How do you know then? So as long as you have your stop loss in, the oversizing is not that big of a problem. The oversizing becomes usually a problem because traders then go and tilt out afterwards. So it's a different story if, this trader, one of my traders who's around the 6 million mark, he scales into his trades, and that's a superpower. He's got nerves like steel, just unbelievable. He's an ex-soldier, was really highly decorated in the army, so you can imagine he does have nerves of steel. He also comes with a lot of trauma. There's this really great show on Netflix, War and Waves, and these guys talk about the trauma they had, and none of the trauma that they experienced after they got out of the army it's about the Navy SEALs, was from the war. It was all because they had a really messed up childhood. And then they went into doing some trauma healing with mushrooms. It wasn't mushrooms, it was this Mexican herb. I can't remember what it was. So um, usually to get back to the large potential in a move, the large potential, when he sees a large potential, it is all quantified. So volume has to do something. The chart has to look in a certain way. Fundamentals have to be in a certain way. Then he knows it has a large potential, but it's never a feeling. And so with his large potential comes also his risk management that's adjusted. And so oversizing is not because you double up your position because you see a great opportunity. It is you double up your position, and that is too big for your account. Right? You double up your position and it is driven by emotion and the fear and the uncomfortable feeling of having had a loss. You see the difference? So high confidence, if that's based on numbers and strategy, by all means go for it. I know a trader, he gets in a trade and he keeps doubling up if the position goes against him until a certain limit. And then he says, okay, here is where my trade doesn't play out anymore. And then he closes out all the positions that he scaled into. And he's a guy who makes 50,000 a month on average. As far as I know, he's an Aussie guy. So I hope that answered your question. I wish I had more time to talk about these things and really ask you guys specific questions. And if I may, if that has been helpful for you, and as Brenna is asking, how do we get more info, and you would like to continue that journey, I'm actually just launching a new service, the Pro Trader HQ. And I've got so much knowledge. I've got 20 years of knowledge and experience and working with traders and trading myself. Um, I I want to share that with more traders. I mostly do one-on-one work, but then, we have this great work one-on-one, but we don't like, there's so many hundreds of thousands of traders that I think could really do with the work that we are doing. Now, the 7 areas that need consistent attention to keep you performing at your best are your trading strategy, your execution skills, your risk and money management, your behavioral finance, your pre and post trading routines, your health and well-being, and then your personal development and your growth. And that's why I am launching the Pro Trader HQ, where it's a monthly subscription of only 99 Australian dollars for you guys. So I'm going to do it at a $50 discount. And you get instant access to a video library where we talk about these things, or we have recorded these things that I talked about today, but there's like 15 videos already. You get daily tips, insights, and guidance on a dedicated Twitter account. Every 2 weeks, a comprehensive newsletter. So no fluff of you have to be disciplined and patient, but where we go really into the detail of where you can identify what your pitfalls are and how you can improve. And then here's my favorite, once a month, a pro trader mentorship call where actually I should, that's the Pro Trader HQ. And so here are the details. And so we there's a Pro Trader mentorship call once a month where you can ask me questions, anything, your charts, your mindset, life challenges, because, there's a lot of challenges in life. It's like trading, it's like driving. Driving on an empty country road is really easy, right? But come to Paris and drive in Paris, not that easy anymore, because there's so many influencing factors that we now need to take into consideration that affect us. So we get scared when someone gets too close or cuts us off. We get angry. It's exactly the same experience. So if you want to join, David put the link into the chat. And always remember, every successful trader had a dark past. Market wizard Linda Rushke, she started off her career in the first 6 months with a 50,000 US dollar loss. And in 1980, that was a lot of money. And then she turned into one of the best traders in the world. And as Karl Barth says, though no one can go back and make a brand new start, anyone can start from now and make a brand new ending. And I really want you guys to remember not to give up. I had so many traders who have been trading for 10 years and struggling and fighting. And suddenly it was like a switch that was flipped. Suddenly they got it. It's like suddenly I could speak French. Suddenly that fog in my mind was gone. And so it's the same experience for them, where this guy, he was, I don't know, he spent, I think, $30,000 on those damn evaluations, and now he's just acing one after the other. It's just because he released a blockage. So it doesn't have to be like that for everyone, of course, but I see that over and over again where suddenly they get it. So if you're struggling, keep working, keep trading's the best job in the world. It's tough, but it still beats everything else, in my opinion. So I hope that was really helpful for you guys. Thank you for being here. I'm utterly grateful. The monthly calls to group session. Yeah, the one-on-one work is separate from what we are doing. So it's group mentorship. Yeah. Otherwise, there wouldn't be enough hours in the day for me to do the one-on-one for everything, for everyone. Yes, you can bring all your individual questions. So my favorite, I don't like doing Monday TV like today, because you get a lot of knowledge and insights, but applying it in your personal environment and into your personal life experience is a different story. And so I love coaching. I'm a trained coach. I've been trained since 2005. And so I'm still training because the coaching tools and work is it's just getting better and better each year because with all the new insights with MRI scans and so on. So I don't like teaching like we did today. I really like give me your situation, give me what you're struggling with, and then we work through it together. And as we do that, as we work through your experiences, everyone comes on a journey with us. And that's the amazing part. So not only you get the benefit, we can really benefit a lot of people at the same time. And this is really what I want to do. I want to spread more love and success in the world. So, yes. Well, we made it. Uh, Thank you so much for having me, David. Thank you so much for organizing these events. Apologies again for the mess up at the beginning. Yeah, high-speed internet, $150 a month, and my little internet plan before worked so much better. But that's life, isn't it?